Market staged a smart recovery on Friday. However, for the week, the Nifty, the Sensex and the Nifty Bank posted losses while the mid-caps outperformed. Hello and welcome to Airtel's Roundtable. Over the next 30 minutes, we'll tell you how stocks reacted to the central bank's regulatory action, the big earnings upgrades as well as the downgrades, and the market outlook. I'm Nigel. With me, my editors, you have Prashant, Anuj, as well as Nimesh who join us. And we also have Mir. Hey, guys.
Hi, Nigel. Good evening. And of course, thanks to Nigel for the young question. Because, who wants to listen to the three mid-40 guys and throw in Mir as well?
More than 40. Everyone wants to listen to you all, guys. I'm lucky I'm in the hot seat.
But yeah, I mean, just that kind of a week, right? By the end of the week, it left you confused. Actually, especially the last 2 days, whether the market was up or down. I mean, look at Bank Nifty yesterday, down so much today, sharp bounce back. Yesterday, the PSU index was down so much today. It was up so much today, sharp drawdown. So, I don't know. I mean,
so I want to quote Vijay Kedia, who said, in a recent party that ये market भाप रहा है, market सबको भाप रहा है. So it's just, testing the patience of every investor as to how much it can fall.
So he said it in other context, but yes.
So yeah, so bhap raha hai. So that's the market for you. It's going to be very tricky.
But no follow through, right? I mean, if you're looking for a direction on the index, one day it is down, one day it is up. Now, for example, on Friday, today, I mean, that is today, we left off 50, 60 points higher. And if, say, Wall Street doesn't do very much, on Monday morning, on the Nifty, it's not very clear whether the market wants to actually continue because it's not follow through on the upside, neither on the downside. So I think that kind of a
So, from a technical point of view, imagine 21,690 has been considered as a big support on the Nifty. If that gets broken out, I'm told, markets can sharply fall. And on the upside, if 21,800 gets cleared on the upside, then I'm told that it will be a large short cover rally as well. So, in the 200 points, market can swing either way. So,
absolutely.
That's the kind of market.
That's where I think the 20 and 10-day exponential moving averages are placed. Let me just, take you through the market action for the week. Though, as I said, it was a bit of a mixed week for the market, especially for the Bank Nifty. The Nifty was down marginally. The mid-cap index was up marginally for the week, though it didn't look like that on Friday, of course. On Friday, it was completely different. But, guys, what was happening was very interesting. Look at the Nifty Bank. For the week, it was down 0.7%, but within that, the PSU Bank Nifty was actually up 5%. And the Nifty Private Bank was actually down 2.3%. It's the weightage of the private banks, which is, of course, the factor here. And that's why you saw that move on the Nifty Bank. But for me, the big highlight of this week was State Bank of India. It had its best week since January 2021, and it really broke out to new lifetime highs. And it looked like this is finally looking like the 2003 to 7 phase when SBI really was the leadership stock for the market. It looked like that. And of course, the other big highlight was the fall in some of the FMCG majors like ITC. Of course, there was some news flow as well. Also, some signs of, first signs of markets moving into defensives. The top gainers this week, apart from PSU banks, were actually Nifty Pharma Index and Nifty Healthcare Index. So, in that sense, perhaps the market did throw a bit of a warning sign, especially in some of the non-bank PSU stocks towards the end, like PFC. But still, the jury is still out on, what next for the market, really.
Okay, all right. Anuj, just one point I want to make with regard to that Nifty Bank point that you're making. We have HDFC Bank that's been a big underperformer for the last 6 months or so. So I'm just wondering whether the market is ready for new leadership on the Nifty as well as the Nifty Bank. The last 6 months, HDFC Bank has been an underperformer. And if you look at its weightage on the Nifty Bank and the Nifty, on the Nifty, it had close to around, 400 basis points difference between HDFC Bank and Reliance Industries. That's come down to around 100 basis points. Yes. And on the, on the Nifty Bank itself, between HDFC Bank and ICICI Bank, there was close to 600 basis points difference. That's come down to 200 basis points. So, in the near term, if maybe ICICI Bank can take over the leadership and maybe Reliance takes over the leadership, that breakout that we are talking about, dethroning HDFC Bank, may not be such a bad thing. How we talk about cricket parlance, right? If the batsman's not playing so well, keep him in the team. But, maybe, in fact, just change the order a little bit, and that'll help.
Oh, absolutely. I think, Nigel, that's a very nice piece that you put out. And in general, I think also the banks, which normally peak out at 38-40%,
that's
already down to
31%.
31%, right? And as you said, I think the day perhaps HDFC Bank comes down from the top of the pedestal is perhaps when it bottoms out as well. That's also possible. We have Mihir with us, actually. Mihir, what have you made of this recent underperformance of HDFC Bank and the way, PSU banks have filled up that gap, especially SBI?
I think it's cause and effect. The fact that PSU banks have done so well is probably taking some money away from the private sector. But in general, the banking index has been underperforming for some time, and most of it is linked to the fact that we have kept liquidity quite tight for quite much longer than expected, frankly speaking. And even in the MPC, the RBI is a bit on the hawkish side as far as liquidity is concerned. So we may not expect a delay in the rate cut cycle, but certainly they are keeping liquidity tight to make sure that inflation expectations don't go haywire, and that is, I think, weighing on the banking sector. My guess is that typically stocks tend to lead the actual good news by a few months, and we are probably towards the end of the underperformance of the banking space rather than the middle or beginning of the space. So
Private banking space.
Private banking space, absolutely.
PSU
PSU is a different orbit altogether. But it typically happens, right? Because you've seen so much action in PSU financials, not only PSU banks, but the other PSU financials, that it is sucking some retail money away from the mainline banks, I would say.
You know, some have made this argument that PSU banks now should, because they're so well run, the NPA problems are a thing of the past, technology-wise things are looking much better, that you should not shy away from giving them, maybe not the same multiple as you'd give a private bank, but it should not be that big a difference as well. Public sector banks, even after the rally, etc., they're still at what, 1.5 times, 1.6, in that vicinity, right?
Certainly.
So is there multiple expansion room, in your opinion?
I would say it's limited because the business composition is different. Private banks are still more retail oriented, where the margins are more stable, higher and granular. And retail scale up is far more difficult than corporate book scale up. So to that extent, that valuation differential will remain, I would say. Even the growth differential will remain, because all said and done, private banks will always be more hungry for growth, whether it's from the existing business or from new business areas. So that differential in valuations in quality will remain, I would say. Yes, when things go to extreme, there will be a catch-up trade, which we have seen in the last 1 year.
You know, for last as well as this editors roundtable, I wasn't part of that party, so I'm missing out on all these
It's
dialogues.
okay,
I'm
that's
lucky.
okay.
I'm lucky.
But you've been partying a lot some other ways.
Yeah, no. So I was at another party this week, you know, and there was some of these fund managers, and I asked that fund manager who's been the big bull on PSU and maybe a mix of mining stocks as well. So I said, what do you make? All these stocks are up. So he said, the story is still, there's a long way to run from here. For him, he can say that actually because he's bought it less than half and some of them 1/3 the price as well. So, but clearly, I mean, a few fund managers that I met and some of them who have got this PSU rally bang on, they said that there's a lot to go. It's easy to say because they've got in at a great price, but that's just some feedback that I got from the party that I went to on this week. But Prashant, earnings season, how's it been?
I mean, we are a month into the earnings season now, Nigel. So let me just go across and take stock of what the earnings have thrown our way. And we're actually 0.75% done in terms of the earnings season. This is the third quarter season. And what we typically do is, how have earnings expectations moved in this last 1 month for the top 200 companies? So we have, as I said, 76 companies which have reported, right? And 52% have seen downgrades and 43% have actually seen upgrades. So more downgrades than upgrades is what we've seen. And these are, by the way, Bloomberg consensus expectations. So for stocks, you'd say, well, this does not add up to 152. That is because, for many of them, for some of them, actually, not many of them, there is no coverage. So this is Bloomberg consensus expectations and how the street has moved the earnings expectations of full year up or down. So let's just get on with it in terms of the top upgrades that we've seen. Notice something, similar, all in a way new age tech, right? Look at this. So EPS change and I've looked at FY24 because, you can look at FY25 as well. But the point is there's more certainty now with 1 quarter left and that will reflect in any case on FY25. So I've taken what is nearer. So PB Fintech has seen a 107% earnings upgrade for the full year, FY24. Delivery has seen a 36% upgrade on top of where earnings estimates were when the numbers were reported. Zomato has seen a 21% earnings upgrade. All right, this is all new age. Look at the oil marketing companies, and we've discussed this earlier. Nimesh has also put out a few pieces over the last few months. IOC has seen a 20% upgrade. HPCL has seen a 13% upgrade. BPCL has seen about a 10% upgrade. And it's strange. I mean, oil stocks do well. Aviation stocks are also doing well. Interglobe has seen another 19% upgrade. So Indigo is on a roll. Maruti has seen a 14% upgrade. And of course, I mean, Trent, we were just discussing this off air, 13% upgrade for Trent and full year earnings expectations. And there are some cement names as well. ACC is on the list and there is Ambuja Cements as well. But upgrades are in the minority. Downgrades are the longer list here. And once again, chemicals top the list in terms of the number of companies which have seen downgrades. UPL, it's a big one, right? UPL, of course, the troubles are mounting. Navin Fluorine, 30% nearly. Gujarat Fluoro has seen a 23%. And Tata Chemicals also disappointed and has seen a 20% downgrade. The QSR companies like Devyani International, Jubilant Food, and we kind of again talked about how names like Zomato are doing well, but QSR chains are not. Nykaa is another one which has seen a 41% downgrade. Then there's Piramal Enterprises. Some companies. Laurus Laboratories continuous disappointment. Adani Wilmar has seen also a sharp disappointment. Vedanta has seen a 22% downgrade. Tata Steel was a little surprised, but it showed up on the list with a 40% downgrade to full year earnings expectations as well. So that's the list. I mean, 76% done for the third quarter earnings season, but the overall picture is not all that sort of pretty, with many more downgrades as compared to upgrades. Mir, any actionables in that sense from that list that I presented, or is the market is super fast in pricing things in, but is there anything left here?
I think the broad trend is kind of similar to last quarter. It was the same chemicals, some IT, and
Same
some
trend.
some IT, some financials, especially banks, which saw minor downgrades, and that trend continue in this quarter. I think broadly speaking, the global sensitives are still not showing so much traction. The domestic discretionary demand seems to be again a bit of a question mark, and again the restaurants part and the discretionary QSR part, same trend as last. So I don't think there's a bit of a change in the trend. I would have hoped that the consumption piece picks up a bit, but that's been a little bit of a disappointment.
But nothing actionable in that sense? I mean, anything you like
No,
or
I-
dislike? Or dislike more
So, for
or like
example,
more?
chemicals, we've seen massive downgrades, but now
How much of
it's
it
a
is
street behind now because the price is also corrected, right? They are
Yes.
at rock bottom
In
prices
fact,
now.
most
So
of them
from
have
a
stopped
price-
falling.
Exactly. A couple of stocks
on
have
bad
started
news.
For
Yeah.
example,
rally, like
Aarti
that,
has been a big
Aarti,
mover
exactly.
actually.
Yeah, I mean,
Correct.
so-
So from that sense, you got a sense
So chemicals,
that
as we
pricing-
discussed, a couple of months ago also, chemicals, the game should be now volume growth. We should not be building in margin expansion. But most of these chemical companies, especially the large ones, already have executed or are in the process of executing large volume expansions.
Yeah.
So even just sheer volume expansions can drive earnings by 15 to 20% for the next 2-3 years. So that's good enough after this correction.
Okay, all right, got that. Well, I'll tell you what, let's slip into a short break. On the other side, we'll continue to decode the market action and look at the cues that are stacked up for the next week. Don't go anywhere.